Hey, YouTuber, Zach Klemmer here with Living in Tucson. I'm with eXp Realty, and I have my number one mortgage lady with me, Phyllis with Barrett Financial. I've known her for over 20 years, and she's my go-to person for your new home loan on your dream home. And I've been getting a lot of calls from customers and clients about anticipated rate drops. A lot of people are still waiting on the sidelines, waiting for the lower rate. And that may not be the best strategy because the faster the loan rate drops, the more people are going to be into looking out to get a new home. And that's going to crowd out the market right now in Tucson. There's less than 4 months supply, and that's really going to squeeze out. So why wait? Phyllis?
Hi, thanks for inviting me, Zach. It's always great to talk with you. And I'm very happy working with your clients always. It's a great relationship that we have. So just as you're saying, essentially, yeah, there's a lot of people that are sitting on the fence right now and they don't understand why it's the worst thing that they can do right now. When interest rates are high, a lot of people don't qualify to even buy a home in the first place. So it makes it a lot fewer people that are out shopping. And so when they find a house, it's usually just one or two, maybe three at most people, making an offer on that house. Whereas when interest rates go down, you've got everybody and their brother is going to jump back in the market. So now you've got, 10, 15, 20 offers on a house, and the seller's just looking through who's going to close the fastest and who's putting the most down. So I don't have to worry about appraisal value, or I don't have to worry about, whether or not they have enough money to close. So right now is the perfect time to buy, because not only are the home values, fairly stable right now, but with interest rates a little bit higher than we're all accustomed to, if you can qualify right now to buy the house, you can get a good deal on the house where you have the chance to actually negotiate and try to get the things that you want from the seller, sometimes including closing costs. And right now, even getting them to pay for your realtor's commissions, which is a big new thing that's going on. So if you buy the house now, you're going to get that, get it at current prices before the market goes crazy. Once interest rates come down and everybody comes back in the market, it's going to push those prices back up. And you're going to see that, it's going to be much harder to get into a house.
Tell us about how you work as a broker compared to someone that just called up their local savings and loan or bank.
Great question. So when you're going directly to your bank or to the local credit union or wherever you choose to go, that's one bank that you're working with. As a mortgage broker, I have currently access and relationships with 150 different banks. So when you're going directly to your bank, that's the only pricing options that they have. They don't have the ability to shop you with everyone else. And you sure don't want to spend, 3 weeks just trying to see who's got the best pricing today and keep redoing that every day to see what's out there. When I'm looking at loans and when it's time to lock you in, I'm pricing you with every bank that I have available to me, and I'm looking to see who's got the best pricing. Perfect example is I have a client that was getting ready to close recently, and they had enough time away from their closing date, so we had time to do things, and we had a big rate drop in the market. Unfortunately, the bank that they were with did not allow them to be able to float down that rate. And most of the time you cannot. Most banks will not allow that unless there's a really big drop. But in this case, it was a big enough drop where, as a broker, all I had to do is move his file to a different bank. And I saved him $80 a month off of what he was going to get if he just continued closing with the original lender that we started him with. So it's not always an option. But in his case, it was, because we were far enough away from his closing to be able to make that happen. But it's just another benefit of working with a broker who has the flexibility and can also is also able to be more competitive with our pricing too, because we don't have to pay the branch manager and the regional manager and the corporate office. There's not a whole bunch of extra layers of people that have to be paid. we're going directly to the bank, through our brokerage, and you don't have to worry about your pricing getting all marked up. So when you're comparing a bank to a broker, 99 times out of 100, the broker's going to have much better pricing. And, that's just because we don't have to pay so many middlemen in the middle.
One of the things that we talked about at the Marana Chamber on Wednesday was the fluctuation and the drop in the market. Can you expand on that, please?
Yeah, so I usually like to look at what's called the 10-year Treasury note. It's just a good rough reference for short-term interest rates on kind of what they're doing. And what had happened was the 10-year Treasury note had dropped about 50 basis points. So that's half of 1%. So if it, for example, that means that if it was around 4% and it dropped down to, well, actually, I'm sorry, it was at 4.2% roughly, and it dropped down to about 3.8% or 3.7%, sorry. So that 50 basis point dropped interest rates about 0.5% overnight. Of course, it has come up a little bit since then, but when you see the US 10-year Treasury note going up or down, I would say it kind of correlates right around like a 0.25% drop is almost a 0.25% drop in your interest rate as well. So if you want to know what rates are really doing, ignore all the news, because the news a lot of the time is giving you news from a day or two ago, or sometimes even a week prior that they're getting their stats from. If you really want to know what's going on, just open up the US 10-year Treasury note. It trades all day long, up and down, just like if you're in the stock market, and you can watch what it's doing all day long. So, and that is the best correlation, like probably about a 90% correlation to what interest rates are doing.
So here's the thing. Why wait? Why sit on the sidelines? If you're looking for a home, start looking now. The advantage is that you'll get a better price. You'll have more time, more advantages to negotiate with the seller to get the home that you want at the best price and terms before the rates drop further and there's more competition that would bid up the price of the home. Don't you agree, Phyllis?
I absolutely agree. And it's even more important than ever to do that right now if you happen to be somebody that maybe needs down payment assistance or needs help with the seller to pay your closing costs. If you're a veteran and you're coming in with zero down, or if you're trying to come in with, minimum down payment, like 3% or 3.5%, when the market was really super hot in 2020 and 2021, and interest rates were super low, and those housing prices were being pushed up, what the sellers were looking for was who's going to put the most cash down, or who has the most cash in their pocket, just in case the appraisal comes in lower than they were hoping or anything like that. Because that protects the seller, making sure that they know that loan's actually going to close and the transaction is going to be completed. When you have absolutely minimum down, you're a risk to the seller, because the seller may or may not, what if the house doesn't appraise high enough, or what if right before closing, you just don't have enough money to get there. So right now is the best time if you are especially if you are a 0 to, let's say, 5% down buyer, because you have that flexibility right now where the sellers are willing to work with you, and you don't have to compete against people that are putting $100,000, $200,000, $300,000 down on a home.
That sounds good to me. It's music to my ears, Phyllis. That's why I work with you, because you're the best.
Well, thank you, Zach. I appreciate that. I love working with you as well. You know your market like nobody else.
And just to be totally above board, Phyllis did my last refi on an income property, and I can't be any more satisfied working with anyone. She's a real pro. I definitely support her. That's why we're doing this podcast, to educate my customers and the public on what they need to consider when they decide that, yeah, we want to buy our dream home.
Well, I'll just add to that, Zach. you as an investor, but also just in general, my clientele is all the way from the first-time home buyer who's never bought a home in their lifetime, all the way up to seasoned investors that have, bought and sold 20 homes in the past. I'm always, I will always meet each client at the level that they're at with what services that they need and what education that they need. And I'm the first one to tell, especially with first-time home buyers, I'm always the first one to let them know, look, you're going to have questions. You're not going to know what they all are right now. Don't be shy to ask me questions morning, noon, and night. And even if you ask me the same question 5 times, I will be happy to explain it 5 times, even if I have to explain it 3 different ways in those 5 different times to make sure you understand what's going on. A lot of people get mortgages. They have no idea what's happening. All they know is, what's my rate? What's my rate? A lot of the times that rate means a lot less than you even realize. But if you want to know more about that, especially when you're putting less down, let me know, because I also have great programs that have significantly reduced mortgage insurance that can make even a higher rate a much lower payment.
Thank you, Phyllis. Hey, this is Zach, living in Tucson. I'm a realtor with eXp Realty. Like and subscribe to my YouTube channel and follow me. Thank you, Phyllis. Have an awesome and amazing day.
Thank you, Zach. It was great meeting with you today.
You're welcome. Bye now.
Bye.